Yeah, welcome back to class. Uh, in our last class, we are told that we continue from where we stopped. Now we are taking task investigations. Task investigations. The action of investigating something or someone through a formal or systematic examination or research is called investigation. Investigation is the act of investigating something or someone through a formal or systematic examination or research. Okay, so as these things from task audit uh, are called for when there are problems in, for example, an organization either affecting the whole or particular segment of the organizations. Okay, so unlike task audit, investigations will only happen, okay, will only happen when a problem has what, as well, when a particular problem exists, okay, when a problem exists. So that's why, so most time it's a reactive approach, okay. It comes in a reactive way, okay. So after a problem might have occurred, maybe a fraud have occurred, then there will be a panel that will be set up, okay, to investigate the matter, okay. So it is a what, it's more than it is more than an audit, okay. It is more than an audit because there's a deeper what in the, it calls for interrogation, okay. So because the accused will be called, then you start what, you start acting asking some question, okay. You question the accused because you inquiring from for some vital information that will enable you reach a conclusion as to whether is what is he will be held responsible, okay. So maybe whether he should be okay. Let's take it this way. For instance, maybe a fraud has occurred in your organization, okay, and you are there are many suspects, okay. So maybe you are suspecting the accounting department, or you are suspecting the finance manager, okay. So in that case, you have to carry out some what, you have to carry out some investigation. Yeah, the audit has helped uh identify that a fraud have occurred, okay. So now you have to investigate these fraudulent activity, okay. So by so doing, you are investigating, okay. So it is a deep examination, okay. A deep what, a deeper examination, investigating something or what, or someone. So investigations as these things from tax audits are called for when there are problems in, for example, an organization either affecting the whole or particular segment of organization. So such could be required when a large fraud is suspected or when evidence of mismanagement abounds and an interested party requires that the effect on the enterprise be quantified for management decision making purposes. So in an investigation, the scope of work is wider than that of a tax audit. So the details of checking and depth of the work will also likely be more than that required for an audit exercise. Okay, so unlike an audit, the motive, okay, the motive is to obtain a sufficient and appropriate evidence or which a conclusion will be drawn from as to on what the auditor judgment, okay, on what the auditor will form an opinion, okay, as to whether the financial statement shows a true and fair view. But in the case of an investigation, okay, so like I mentioned earlier, that it is a reactive approach um, to a matter that have occurred. Okay, so a problem has arise, so you have to investigate the cause, who are behind, why has it happened, in what way have it happened, okay. So in what way it happened. So all these are what are investigation. Who is the cause, why, and what is the cause, okay, and where it happened. Okay, so tax investigation is similar to any other form of investigation. Okay, so it is not carried out on routine basis as that of an audit. So for example, a statutory audit of the accounts of a company must be carried out every year. So that's statutory, that's the legislation. Whereas investigation may not be carried out in the same company for several years. So it depends on the level of wrong. Okay, it depends on the level of wrongdoing in the company. Okay, so if fraud has been emanating times over time, then it calls for investigation. As it occurred, you investigate the matter. As it occurred, you investigate the matter. So it can not it goes beyond fraud alone. It can be some form of harassment between the employee, okay, between a senior colleague, okay, so from a senior colleague down to a junior colleague, okay. So it depends. So it may come in form of human relation, okay. So all these are what investigation, but here we are specific on taxation, okay. Tax investigation will be carried out when a taxpayer is suspected to have committed fraud. When a taxpayer is suspected to have committed fraud, in what way could that be done? It could either be through what, maybe tax evasion, okay, tax evasion, or in form of accounting shenanigan, okay, that's window dressing, okay. So by cooking your financials in a way to hide away from tax, okay. So suspected cases of tax evasion could lead to investigation. This could be due to failure to file tax returns, filing of incomplete or inaccurate returns, failure to register for tax purposes, and more cases similar to this mentioned. Are we together? So now let's take the merits and demerits of auditing and investigation. What are the merits or advantages of audits? Audit is carried out to add credibility to the financial statement concerned and to assure stakeholders of the truth and fairness of the statement. Apart from the above advantages, there are inherent advantages in having accounts audited. Among them are the following. Okay, one, disputes between partners may be largely avoided, especially where complicated profit sharing arrangements subsist. Okay, so there may be disputes among partners, between partners. Okay, so where in a case whereby they are trying to avoid complicated profit sharing. Okay, so in that case, because the more profit you earn, the more tax you pay. Okay, so there may be what, there may be disputes, but all this will help to what, to solve these disputes. So independent examination of what, of partnership accounts will ensure accurate assessment and division of profits. Okay, so because you cannot earn more than what you've contributed. B, changes in ownership are facilitated by unqualified audit reports. For example, the admission of a new partner or two sole proprietors merging their businesses to form a partnership is made easier than otherwise would have been the case. So if previous audited accounts are available for examination, so but if there is nothing of such, then um, a firm of such or a company in that case will be hiding away from tax, or from what, from tax. So tax audit will help to what, to solve this problem. Audited financial statements serve as reliable source of information for banks and other financial institutions when it comes to assessing the strength of loan or overdraft applicants. Yeah, because LIRS or FIRS has made it compulsory for you to submit your audited financial statements. Yeah, you are complying to tax regulations. By the way, it also contributes to the growth of a business, to the financial support, because banks or other financial institutions may request for your audited financial statements to enable them access your company on a going concern. So, another reasons or advantages of audit of tax audit is that audited accounts of the partnership as adjusted for tax purposes submitted to state internal revenue service carry greater authority than unaudited accounts. 5. The presence of a qualified auditor is useful because of the variety of other capacities in which he is able to assist. In the case of a company, the auditor can offer taxation information technology services. Okay, so now having a look at the advantages of audits, let's take some disadvantages. 1. The payment of audit fees. Yes, auditors' fees add extra financial burden to businesses. Yes or yes? Yes. The reason being that in their financial statement, they must include what? They must include auditors' fees. So it is an additional what? It is an additional burden on company financial. So this it has its financial implications, right? So it is believed that had it not been a statutory obligation, many companies would not engage the services of external auditors. So in spite of the advantages outlined above, it is for this same reason that few partnerships and sole proprietors have their accounts audited. Otherwise, nobody I know someone like you would have avoided tax if not it's statutory. Now B, auditing requires the clients, staff and management to provide what? To provide information to auditors which they see as additional burden that could disrupt their work plan. Okay, so because once you inform a client that on so date you are coming for tax audit, there is what? There is trouble, because first you disrupt the activity for that day you are coming, because they will have to make available some of their staff, of which the time that will be spent with you, that is the staff time expected to be spent with you if you come, would have been used in what? In carrying out their daily activity. Okay, so in that case you are disrupting their work plan. So and external auditor should therefore plan his audit work carefully to minimize the disruption which his work could cause. Are we together? Okay, so now let's take our fundamental principles in auditing. Now these fundamental principles are derived or drawn from international ethics for accountants. Okay, international ethics for accountants. So be you a tax professional, or be you an audit professional, be you an accountant professional, you are expected to comply with these fundamental principles. In fact, not only for financial practitioner, okay, or not only for tax practitioner, it covers a wide range of professionals. Okay, if you are an auditor, if you are a doctor, you have to protect your integrity. Okay, if you are a tax professional, you have to follow the guide. You should be guided by the rule of objectivity. Okay, likewise, if you are a lawyer, you should protect your integrity. You should be competent. You should be confidential. Okay, you should be confident in yourself. You should have confidence in yourself, and you should know how vital information you have at hand are. So you should not let them out to third parties, because you have all rights to that information. So you have to protect you have to protect your clients. Okay, so now We are taking these 5 fundamental principles in auditing code of ethics and conduct. These are set out below. We have on integrity. Professional members must be straightforward and honest in all professional and business relationships. Integrity implies not just honesty, but also fair dealing and truthfulness. You must be straightforward in all your dealings with clients, okay? Because you are um your reputation is built on what is built on your integrity. Secondly, we have objectivity. So professional members must not allow bias, conflict of interest, or undue influence of others to override their professional or business judgments. Okay, so you must not what you must be independent. Okay, you must be independent. You must be sane and you must act independently. Okay, so you must not allow any bias, any undue influence to override your judgment. Thirdly, we have our professional competence and due care. Members have a duty to maintain their professional knowledge and skill at such a level that a client or employer receives a competent service. So based on current developments in practice, legislation and techniques. Okay, so you must be updated. Okay, you must update yourself on what's on current developments in your profession. Okay, so members must act diligently and in accordance with applicable technical and professional standards. Okay, now we have ISA in the case of auditing, we have IAS in the case of financial statements. Okay, so you can't be a tax auditor without having knowledge of these standards. Okay, you must be familiar with CAMA rule. Okay, so almost also other financial regulations, you must be familiar with them. Okay, like BOFIA and Insurance Act. So it depends on the industry you are auditing. Okay, so you must be competent. In fact, all accounting firm or tax firm must make sure they have a competent staff in place before accepting before accepting an engagement. Okay, confidentiality. Professional members must respect the confidentiality of information acquired as a result of professional and business relationships and must not disclose such information to third parties without authority or unless there is a legal or professional right or duty to disclose. So, confidential information acquired as a result of professional and business relationships must not be used for the personal advantage of members or third parties. Though there are some circumstances of which you have rights to disclose some certain information. Okay, so you have statutory obligation to disclose, and you have a voluntary right to disclose. So it depends on circumstance that warrant the disclosure. Okay, so on the fifth one, we have our professional behavior. So professional members must comply with relevant laws and regulations and must avoid any action which discredits the profession. So they must behave with courtesy and consideration towards all with whom they came into contact in a professional capacity. In fact, they are expected to be acting in the public interest. Okay, so you must do nothing that will bring the reputation of the professional body to disrepute. Okay, so your acts must not bring a damage to the reputation of the professional member professional body you belong to. Okay, so you must protect your identity. Okay, you must protect your identity and you must behave in such way that you must behave with courtesy and you must to be respected. You have to give respect to people. Okay, so you respect your clients, you respect the public. Okay, so you must not act in a way that will discredit the profession. So we are taking a break now. When we come back, we continue from where we stop. Have a lovely break. Take care.